All right, let's take a closer look at the tech sector this morning. Joining us right now is Doug Clinton. He's the founder and CEO of Intelligent Alpha. And Doug, we've been watching this drawdown in tech stocks, particularly in some of the big names where you've seen declines of about 20%. The NASDAQ, though, down by about 13.6% from its high. You think that drawdown is more a reflection of concerns about tariffs or more a reflection of doubts about AI?
Becky, I think it's probably a little bit about both. I think that tariffs in some ways are probably the proximal excuse for investors to sell because AI has had such a run for the last 2 years. But I think what's really striking is if you really think about and look at more recently, what has been the commentary around demand for these AI services? We just had OpenAI say that they are capacity constrained with their new image gen model release. Grok, XAI, saying the same thing. Meta, similar commentary via Morgan Stanley. And so the demand for the services is there, but the story has just been broken for investors. And I think that people have been very skittish around AI this year because they're waiting for that sell-off. Now we've gotten it. I don't know that AI will roar back in the next week or month, but I do still believe that we're in this 2 to 4 year window of an AI bull market. And I think you want to stick with some of these names.
Which names in particular?
So at Intelligent Alpha, we use these large language models like Grok and like Gemini to pick stocks, do stock analysis. And on the hardware side, our models still like NVIDIA. We also like TSM and Micron. So our models think there will be a return to hardware where, again, we're still seeing strong demand signals. On the software side, I think that's another interesting place, too, that hasn't gotten as much run as hardware, obviously, in this bull market. HubSpot, HUBS, is one that our AI models really like for seeing inflecting numbers back half of this year.
Doug, I know you've talked to us about this in the past, but what are your models measuring? What are they looking at? How do they come up to this assumption that this is going to be a place to be? I guess the assumption is that there's going to be a lot more money spent on chips.
That's right. And the way that our models work is you can think of them as sort of similar to human analysts. And I always love the analogy that large language models are the best improv actors that you'll ever meet. And so the way that we've created our models is we've created an analyst that looks at a broad set of stocks. And then we've created a portfolio manager that then will take that work from the analyst, just like a human PM would from a human analyst, and say, look, here's what we understand about this broad universe of stocks, AI stocks in the case of NVIDIA, TSM, Micron. And then we want to construct a portfolio that is sort of risk adjusted. It reflects our confidence in what we think in terms of forward earnings outlook for these stocks. And that's how our end portfolio ends up being constructed.
I mean, the AI analyst isn't doing channel checks. Maybe they're just reading everything to see what's been publicly reported about what's happening with the company or the companies that spend a lot of CapEx on those chips.
That's right, Becky. They are doing, I would say, probably more information consumption than any human analyst could because of the scale that these models can operate at. But the channel check thing is interesting. And I see a world where we've experimented with this at Intelligent Alpha. We will have AI in the future doing channel checks, doing customer calls. The voice interface is pretty much there to replicate what a human analyst does. The one area that's still tough is, going to conferences, doing some of the in-person things that humans can do. That's one area where AI will struggle, but I think the channel check thing will happen and we will make it happen.
But channel checks, I mean, I always thought of it as an analyst who had deep sources that they could, almost like a journalist where you have people you're talking to, you're really getting a feel for it. As you mentioned, they can't go to conferences and along those lines. How do you supplement that?
I think it comes down to incentives. I think we've seen these platforms like Tegas, for example, where you've built out expert networks where people are willing to share what they know for a price. And I think that AI ultimately will be able to play in that field. And it's funny, I think having AI agents be able to pay humans to do work or to answer questions is going to be a really important part of the frontier. And there's a company we actually invested in at my other firm, Deepwater, called Payman, that's enabling this technology. So if you're thinking about startups and just what will be the next big thing in AI, I think figuring out how to let AI pay human beings will be a really cool story over the next 2 years.
I guess in virtual currency or some other way you go through it.
We want to do it in human dollars at Intelligent Alpha, and that's ultimately what payment is doing too. I think, crypto could be a thing, but most people just want cash because it's easy. We know how to use it.
Yeah, Venmo. Doug, very quickly, can you walk me through the price points that you see? Like NVIDIA shares, I think they're down more than 11% just over the last month. What's the price target or the price trigger that makes you think, okay, this is definitely something I'd stay in? For the 1 year, it's still up by about 20%.
I think we're pretty close to those levels now. I mean, you look at the PE on NVIDIA, we're kind of low 20s. We were high 20s earlier this year. So I think a lot of the altitude has been taken out of this stock already. And again, I think I go back to those demand signals. There's still a ton of demand from all the hyperscalers. They're not cutting budgets right now. And so I think NVIDIA right here, our models own it, and I think you can own it going forward.
The U.S. manufacturer that Loop Capital Markets senior consumer analyst Laura Champine suggested has drastically declined. However, she pointed out that since American manufacturers will probably do well under the current administration, now is the greatest time to buy. To put buying possibilities in perspective, the AI darling of Wall Street just experienced a downturn. Investors seeking exposure to semiconductors, GPUs, and AI may find this to be an opportunity, according to BofA. In a similar vein, Jim Lebenthal, chief equity strategist at Cerity Partners, stated that Magnificent Seven stocks are currently trading at terrific levels, making it a great time to purchase them. According to Wall Street experts, NVIDIA has an average upside potential of almost 61% as of March 30th. It is among the top American stocks available for purchase. Moody's Ratings raised NVIDIA's senior unsecured rating from AA3 to AA2 on March 26th. This update was a reflection of NVIDIA's solid financials, great long-term growth prospects, and market leadership in AI infrastructure. On Q4 of FY25, NVIDIA also made billions of dollars on research and development, putting it ahead of rivals in the software and computer industries. On February 26, 2025, NVIDIA released their Q4 earnings figures. At $39.3 billion, revenue for the quarter increased 78% year over year and 12% quarter over quarter. The GAAP earnings per diluted share were $1.89, up 82% from the same period previous year and 14% from the third quarter. On April 2nd, the business will pay out a quarterly dividend of 0.01 per share to shareholders who were listed by March 12th. It is anticipated that NVIDIA would generate $43 billion in sales during the first quarter of fiscal 2026. In contrast to 193 funds in the previous quarter, 223 hedge funds were long NVIDIA, according to the fourth quarter database. According to the information on Wednesday, which cited 2 people with direct knowledge of the transactions, Chinese companies ByteDance, Alibaba Group, and Tencent Holdings have ordered at least $16 billion worth of NVIDIA's H20 server chips in the first 3 months of the year. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
We begin this hour with our top story, the world-awaiting President Trump's incoming tariff announcement. Bloomberg's Mike Shepard joins us now with the latest from Washington. Shep, that's what's amazing about this moment. We don't know, and apparently, Mike, based on our reporting, they don't know either.
They don't know either, and they are still deliberating over which path to take. And I think Anne-Marie outlined a really clear-cut set of options for the president and his advisors. But the question is, which door and which path do they ultimately decide to take? And, of course, that opens up a whole other series of questions. How do these levies, when they're announced, fit in with some of the other tariffs that we've already seen the administration impose? On autos, those take effect tomorrow. On steel and aluminum, they've already kicked in. And then how about our other major trading partners, Canada, China, and Mexico? They're all facing levies over the fentanyl trade and immigration that Donald Trump imposed weeks and weeks ago, and that remain a sore point. It even came up overnight in conversations with China's foreign minister, expressing chagrin over those fentanyl tariffs, saying, look, if you want to talk about trade with us, those have to come off first.
Mike, when it comes to what the White House currently is thinking, this quote in Politico, Trump likes the shock and awe. Each country needs to panic and call. Trump wants to hear you grovel and say you'll cut a deal. When it comes to trading partners right now, where do they stand with maybe cutting a deal with this administration?
Well, it's a great question, and it really is the question of the moment. And it's a tough one to answer because we've seen the administration really take a much more elbows-out approach when it comes to long-time allies and trading partners, especially in Europe. The European Union is looked upon with some disdain by members of the administration who object to regulation, who object to some of the things like the value-added tax and digital service taxes that they see as trade barriers and trade impediments for U.S. exporters and U.S. goods. And likewise, in these other trading partners, they're also seeing impediments. For example, in Taiwan, Donald Trump has blamed Taiwan for essentially taking away U.S. manufacturing in semiconductors. So each of them comes with a bit of baggage that Donald Trump will keep in mind as he is negotiating. And they have tried to take, as we have seen already so far, a maximalist position. And whether they're willing to actually concede and conduct those negotiations in a good faith way remains to be seen.
The U.S. stock market's resilience will be put to the test in the upcoming week as President Trump's employment report and tariff measures expose the true state of the economy. The benchmark was in correction zone early this month, and price pressures caused the overall market to close the week down. According to market analysts, the economy is growing too quickly and is highly volatile, making it difficult to forecast the course of events for the upcoming months. Trump has scheduled a number of tariff announcements for April 2nd. The stock market will be shaken by a double-digit correction this year, the Bank of America warned investors. If the economy plummets and unemployment peaks, the company predicts that the overall market will drop to 5,000. But according to BofA, it can bounce back and end the year at 5,500 if the benchmark reaches 5,000. BofA anticipates that equities will end the year higher in its base scenario, with the benchmark fluctuating between 5,085 and 6,175 points. This suggests an almost 7% increase from current levels. According to Wall Street analysts, a recession may be imminent. At the moment, markets are anxious about weak economic statistics and anticipating the impact of tariffs. Even if investors are nervous due to the faltering economy, some analysts believe that current market offers buying chances. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
We'd all known that President Trump was not a fan of the Biden-Harris administration's CHIPS Act, even though it was bipartisan in nature. But it looks as though they're looking at a different way to orchestrate it.
Yeah, that's exactly right. So just to back up a step, the CHIPS Act, of course, was passed with bipartisan support. The whole idea is getting these chips companies to invest more in the United States. It's $52 billion in grants and then tax credits, which are very, very important here, too. So the Biden administration scrambled in their last days to try to finalize the agreements with a bunch of the most important chip companies in the world, including TSMC and Samsung and Intel and Micron. They finalized the terms of these accords, but they didn't disperse all the money. The whole idea was that these companies would hit benchmarks and then the money would go out. So what Lutnick has decided to do is he's decided to use those disbursements as leverage with these companies to try to get them to commit even more money to the United States. So the CHIPS awards are not going to go up in terms of value, but before he actually writes those checks, he wants companies to come forward and to pledge more money. The example for this is TSMC. TSMC originally was going to invest about $65 billion in chip capacity in the United States. It came forward and they said they're going to put in another $100 billion. The Trump administration loves to be able to have those kinds of announcements, especially TSMC is the most important chip maker in the world right now. So for them to say we'll put another $100 billion in the market is very important.
The administration would say that was the effect of tariffs. TSMC has said they just like the American market and want to invest there. But what's also interesting is the nuance on the tax credit, Peter, because in many ways that's more important than the grants.
Right. For many of these companies, including TSMC and probably Samsung and Intel also, the tax credit is very, very important. It could be a lot more money. And so there are discussions about maybe increasing that tax credit. It has been 25%. It could be even more in the future. And that's important for companies that actually have the money right now. If you can put in $100 billion, it's easy to do the math on that. That's $25 billion in tax credits for you. That can save you a lot of money down the line. And you're right. TSMC sees a lot of opportunities in the United States market to be able to make make investments, build some of those cutting edge chips here, and then sell them to domestic customers. You also have companies like Samsung and Intel that could do things like this, are embarking on these kinds of projects. But Lutnick is exerting a lot of leverage right now in these companies to try to get bigger numbers, more eye-popping numbers into the headlines so that they can take credit for bringing some of this production back to the United States.
At a time when, with a lot of uncertainty, particularly with tariffs hanging over the semiconductor industry, it must be a difficult time to commit to more spending from these CEOs.
Right. You're just talking about the tariff uncertainty out there. I guess we'll find out some things tomorrow, but a lot of this we just don't know at this point. And you're right. Lutnick and the Trump administration have pointed to tariffs as part of the reason that some of these companies are investing more in the United States. In the tech sector, the chip sector in particular, it's unclear. We don't really know what the tariffs are going to look like. There's been talk about putting tariffs on the chips themselves, maybe the products, the end products that chips go into. It's not clear exactly how that's going to play out. So I think they need more information. And of course, the timeframes are totally different. They're changing these policies almost by the week, as we've seen. And when you invest in a chip company, you have to plan for decades at a time. So the timeframes really don't match up here. They're gonna have to resolve some of those conflicts going down the line.
The H20, the most sophisticated AI processor permitted in China under U.S. export regulations, saw a spike in orders in February, according to Reuters, which was first caused by the growing demand for the affordable AI models offered by Chinese firm DeepSeek. While ByteDance, Alibaba Group, and Tencent Holdings did not immediately reply to Reuters' requests for comment, NVIDIA declined to comment. The H20, which was introduced following the implementation of the most recent set of U.S. export limitations in October 2023, is the main chip that NVIDIA is legally allowed to sell in China. According to a March Reuters article, H3C, one of the biggest server manufacturers in China, warned of possible shortages of NVIDIA's H20 processor. Chinese companies' aspirations for AI may be hampered by a possible supply shortage, particularly as they increase their investments in the field. In addition to Inspur, Lenovo, and Huawei's spin-off x86 server unit, Xfusion, H3C is a significant OEM partner for NVIDIA's AI chips in China. Since 2022, Washington has prohibited the transfer of NVIDIA's most sophisticated chips to China due to concerns that China may utilize these cutting-edge technologies to strengthen its military capabilities. In February, U.S. President Donald Trump declared his intention to put 25% tariffs on semiconductor and related product imports. According to NVIDIA CEO Jensen Huang, the company expects little short-term effects but plans to relocate production to the U.S. in the long run. China continues to be a significant market for NVIDIA. In fiscal 2025, the firm reported $17.11 billion in revenue from the area, including Hong Kong. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Kevin Green joins me this morning for a technical look, some charts as well, blending some of our fundamental and macro conversation in there too. So KG, I've generally been arguing that I think most tariff outcomes should be priced by this market. I don't know about the economy. I don't have any crystal ball into that. But I kind of thought that weeks of speculation on worst case outcomes would prevent us for a market session like the one we're seeing today. But maybe we got to get one more out of our system. What do you think?
Yeah, I mean, we are still kind of in a little bit of a compression type of market, right? If you kind of look back on the daily chart, I mean, we're pretty much touching lows of yesterday or the day before,
Yep.
Actually yesterday, if you look at the mini S&P 500. So I would put that into a little bit of context here. I think there's a little bit more, obviously, uncertainty. There's a lot of traders that are kind of looking at left tail risk. So if we come in and it's something that's better than expected or it's not as aggressive as the market's expecting, you could see a removal of potential risk in the market that could actually drive equities up maybe in the near term here, Oliver. And when you're starting off today's market, what's really kind of key, you only have about 15 to maybe 20% of stocks now moving higher. You have 24% of stocks actually in the green right now. Only 122 stocks in the S&P 500 that
only
are
one
in the
sector.
green.
Staples.
But we're starting off at a very low base, right? So a lot of the stocks we're actually pretty much at the lows if you're looking at $ADD. So at the end of the day, you actually could get some buyers to kind of step in here. Extreme low, we've seen some buyers really step in. We've had the last two trading sessions starting off negative. ending off positive or at least retracing some of those gains. And that may actually happen to start off the trading session if you want to be a little bit optimistic. This event's not even happening until 4 p.m. Eastern time. It's going to be after the market closes. And we haven't seen any leaks from the White House yet because they probably don't even know what they're doing yet. So I think we just kind of trade. Yeah. So we might just be, if you don't have to put money to work today, Ali, that's what I'm basically saying. If you don't have to put money to work today and you're really uncertain and you don't know what's happening, it's okay to sit on the sidelines. You don't have to pick a direction right now. That is a strategy.
The last thing I want to hear you say, KG, give me permission to trade. No, I think it's a great
you have
point.
Permission to do whatever you want. But I mean, like, if you don't know, then,
No, I totally see what you're saying. It's a great point. Because this has been an absolutely disgusting environment for trying to pick a direction. It's been direct to your point. It's been directionless. I mean, even bonds with the massive reversal from last Thursday. So no matter what you're in. Interestingly, the dollar's actually been pretty stable while stocks have gone from highs to lows and bonds have gone from highs to lows. But then this morning, the dollar is getting slammed again. So that one to me is like, to your point, the stuff doesn't come out till 4 p.m. I wonder if maybe you're onto something, KG. I wonder if we haven't gotten any leaks because they don't know what to tell us yet. And maybe that's the market saying, oh, guess what? 2 more weeks of winter, basically.
Oh, I don't know if it's 2 more weeks of winter.
Well, I don't know, whatever it may be. How many weeks?
Yeah, I think, I mean, you kind of see, you've seen some interviews and some commentary coming from White House officials that they don't really know, and it's the final decision of the president. And they, there was a report, I believe, from the Wall Street Journal late yesterday that said that there's new proposals being made for the president, another option. Like, that really kind of tells you that the White House really hasn't really pinpointed this here. And I think if we have something that is a little bit less aggressive than the 20% weighted average tariffs across the board, I think the market's going to be maybe okay with that. You heard some commentary coming from Ontario's governor that they would remove all tariffs if the U.S. removed all tariffs.
I saw that on CNBC.
There's a lot of commentary that's happening right now. So there's a long way to go, right? Once again, we are catching a little bit of a bid up around 15 points from when we started here just talking. So keep it up. Very low bar. Let's see what actually happens here. If I'm looking at the intraday action, Ali, if we can kind of just talk about these levels, 5,600 is going to be your first area of intermediate resistance. We get a pop above that, 5,660. I'm looking for the upside here. That kind of aligns with the 200, with the 200 period moving average on the 15-minute chart. Any breakdown, 5,530 is going to be your first area to be able to see some support. We saw some strong buyers yesterday and the day before. Once we kind of got closer to that 5,550, 5,540 area. Let's see if that's going to also happen here today. But once again, vol could crush. That could lead to equities kind of moving up to the upside for now. And I'm not sure if that's going to be the reversal of the overall trend or the primary trend, but that's kind of what I'm looking at today. There's a lot of intraday movement or churn.
There is. Okay, I like the chart. Why don't I actually come back and talk more about what you think with the tariff stuff, though, because you said something there I want to come back to real quick, which is one, that, the Canadians seem ready to just drop if we drop. So to your point, if they're doing those conversations in the public sphere on cable TV and stuff, I think everybody's kind of playing it by ear. I don't know. I feel like maybe we're not as close to this as we wanted to be at this point. The other one, though, is the rate that you mentioned, the 20% across everything. I was talking with Edison earlier. Correct me if I'm wrong. What has been the worst potential tariff model put out there so far by the administration? Was it that comment they made that was 20% on everything?
Yeah, 20 to 25%. I think 25 was at the upper end of that range, but that was before we did the auto tariffs. And obviously, it's the question not only of just the tariff or the weighted average itself, and especially when you're kind of looking at autos, it's if you're moving parts back and forth, are we seeing a tax on that each and every time? Because if that's going to be the case, that weighted average balloons up, right? And that's where we don't know. And so I think that clarity also may give the markets maybe a little bit of solace here that, hey, okay, it's just a one-time thing and we can kind of move forward here. But the extreme case is 20 to 25% weighted average. If that does happen across the board, that would be kind of that maximum case. If it's only a 20% weighted average, though, Ollie, on the 15 largest countries that we trade with, that's actually a little bit less, right? That would not be broad-based. That would just be the top. They're calling it the dirty 15. I don't like that term, but the top 15, trading partners here. Well, I mean, that's what you're hearing from Reddit threads and White House, I believe actually Caroline Leavitt's actually mentioned that yesterday in her press conference.
Dirty 30.
15.
15. All right. So then 25% on everything, basically. Tariffs everywhere, 25%. That's kind of like our bar, basically, in terms of, maybe quality for the economy, high bar in terms of like the tariff rate that maybe should be priced in at this point. I remember Jeff Kleintep had a really great chart that just showed potential tariffs, and he put the y-axis as potential tariff, total amount, and the thing shot up even bigger, way bigger than Trump 1.0. So to the point here, we got VIX 30 when those types of words were hitting the tape. So I can't shake the logic to me, KG, that unless we hear something that bad, we should have vol coming in, or at least not going to 30.
Yeah, it depends on the commentary. So if the numbers itself and they just lay out the plan, this is what it is, and no commentary after, I think the market's going to be okay with that. If the commentary after says, "Hey, we might do more," we might get a little bit more aggressive, then I think that's where you kind of get a little bit more of a vol spike. If there's commentary that says this is permanent no matter what, where this is what we're doing throughout my administration, if that's President Trump, I think you see vol move up a little bit more. So those are the two items that you really do not want to hear. And if so, then we probably could see a vol crush in the market for now. Hard data is still going to be kind of that main focus, right? We'll probably just readjust our focus from one thing to another. And I think that's going to be the key. But you could see a little bit of an unwinding of hedging activity that could push prices a little bit higher. And then some of these sectors that got completely just oversold, especially healthcare. You guys brought it up earlier. Maybe one of those sectors that catch actually a pretty significant bid, because even if they tax pharmaceuticals, just as an example, Ali, you can't move away from that, the structure. So a lot of these healthcare companies still have pricing power. It's not like we're not going to buy antibiotics, So some of those sectors probably could catch a little bit of a meaningful bid here if it's a tamed commentary that complements some of these hard numbers that we're going to get from the White House.
Understood. Good point. I think that does bring us full circle, which is the market maybe this morning was freaking out about this not being over, that maybe it's not going to be ready by today. That would kind of go along the same lines to your point of extending the timeline for uncertainty. But hey, we're coming back.